Previously on YouTube's The Redemption Trades.
I really wanted to talk about AMC, about their debt refinancing, their loaners and what they did to giving them shares. And guess what? Today is that day. I finally get to talk about it. I decided to give GMEers a little bit of a break because, I'm kind of tired about talking about it, but don't think I've let up. I still think it's going to go down. Now, I read a lot of market history, and there's a lot of like unknown market wizards out there because a lot of them were successful before the age of the internet. So you guys won't really hear a lot of stories about these guys because they're essentially all in print in like unpopular books and stuff like that. But I've read a lot of them, and they all essentially say the same three key factors that make them successful, and they're all like essentially universal for all these three. And I'm just gonna save you a lot of time right now, so you guys don't have to read all this stuff. So it boils down to three very key things right now, right? And it's to take action. And the first one is to take action in subscribing. And then the second action is to take in liking the video. And the third action to take is to leave a comment on the video. Just kidding. Kind of. Not really. But subscribe. Um, but yeah, here's some of the pet peeves first. And then I will go into addressing some of the stuff I looked at as well. AMC Theaters is not linked to AMC, the channel. I just got to let you know that first. If you didn't know that, now you know. And to prove my point, this is AMC's Wikipedia page. They are the American Multinational Basic Cable Television channel. Now, if you guys look, sister channel is BBC America, IFC, Sundance, WeTV, owner AMC Networks. Let's see what they are. AMC Networks, blah, blah, blah. I don't see AMC Theaters anywhere. In fact, look, AMCX. This is their ticker. This is the TV network ticker. If we go to AMC Theaters, which is over here, we can see all their stuff there. And look, there's AMC. There's their ticker right there. My second one is becoming somewhat of a pet peeve of mine because everybody seems to think because it worked for GameStop, it's a one-size-fit-all situation for every other stock. Yeah, no, it doesn't. And that's the short squeeze metric if you guys haven't figured it out. This is their dates, and the last dissemination date we had was around March 24th, right here. So that is the most recent short data interest. So let's go to our good old shortsqueeze.com and let's type in AMC. And as we can see, short percentage of the float, there's nothing. Like it seems like they're not short this at all. So anybody that's saying something about like a short squeeze interest, I mean, again, I know this is like somewhat unreliable data because A, we're moving on something that's 2 weeks behind, and B, there's a lot of synthetic positions that could be played out because of options and stuff like that. But honestly, this is all we have to go on, or this is all that people are actually going on. It's just that, oh, the short squeeze is still there, but I mean, like you see it right here. Like there's nothing. There's absolutely nothing. So I don't get their argument there. The next one is, and I'm a little numb to this because I used to work in that industry somewhat. I was never like anybody of importance or anything high level, but it's the phenomenon where a lot of negative news will push down a stock, and I do agree with you. And if they keep throwing negative news at the stock, they'll be like, oh, well, we know, and it won't have the same effect anymore, and people just become sort of numb to it, right? Now, what's interesting about that is that after a little while, a little bit of positive news, even if it's the smallest positive news, will cause a bounce in it. But there's a twist to this, which I'll show you next. Now, there's two significant events that I feel were somewhat warranted. This first one is their Q4 revenue earnings beat expectations. They beat earnings, which is kind of funny because they didn't really have a lot of expectations. And if you guys are watching for the future, in 2020, we had a lockdown and we had to stay at least 2 meters apart from each other. That's really hard in a movie theater, but we could not go out, we couldn't watch movies, and most of the movie industry just said that we're going to postpone our big blockbuster movie releases until a future year or something like that, right? And as we could see, like I'm just gonna flip through the revenue really quickly. You guys can look through this up through your history and everything. They had quite a steep decline from the previous year, but if you guys look at the effect of what that caused, positive news, boom, it shot straight up. The second one was how Silver Lake cashed out for 713 million. They had an initial investment of 600 million into their bonds, and essentially what they said was, or what Aaron, the CEO, said was that, hey, listen, we're going to we want to like take off this debt off our books. So if we just give you the similar amount in shares. Can we call it square? And then, yeah, they agreed, which then this sort of positive news of them getting the debt off their books was enough to send the price shooting up, as I'll show you right here. So right around here is when the price shot up. And when the word of them getting that debt off their books shot up the price, they decided to take some profit off the table, and they made like 100 million in profit from their $600 million investment. Not bad considering this was starting out as bonds, but as you guys can see, like positive news like that can have that type of effect. But the question becomes, what happens, or what about negative news? On the negative news angle, as you guys can read, cinema slips as investors digest Disney's latest online release move. And if you look at the stock, this was right around the 24th, blah blah. Yeah, we're relatively down, but honestly not that down. They're still kind of trying to make up their minds. But essentially, what this article is talking about is how Disney's going to try to focus on their digital online releases, but instead of just paying for Disney Plus and getting these movies, they're going to force you to pay $30. It's the same thing they did with Mulan to test it, and a lot of people were kind of like, fighting back for the situation. But I think the way Disney thinks is that, like, you guys want to watch this movie. I mean, obviously, it shows that you do. We own most of the major franchises. You guys are going to pay for it eventually anyways, so we don't care, right? Now, that is somewhat negative news for AMC because essentially Disney has them in a bind. And a lot of these other studios will have AMC in a bind as well. But more on that a little bit later, but I just want to go to this next article too. And Adam Aron, he recently talked about how he wanted to issue about 500 million shares and use the proceeds to do a debt buyback. What this is a share dilution. So he's going to issue a whole bunch of shares, and all the money that he gets from the issuing all those shares, he's going to try to build a war chest, which is smart on his part. Like, I will give him that. It's smart. But as an individual investor, can you imagine your shares getting watered down, because the value getting watered down? It's like, look at the US money supply right now. Your dollar is worth a lot less now because they're just printing more of it. It's not as valuable anymore, right? Imagine that with your shares. I will get into Disney and the other studios and stuff like that really quickly, but it's going to be in this filing here. And I encourage you guys to go read the filings and do your own research on the situation. But these are some of the things that stuck out to me. They might not stick out to you, but there are probably some things that I missed. That's why I say you guys should go read this filing yourself if you guys are interested in AMC. And the first thing that I looked at was they said that they were going to decrease their dividend by 17 cents per share. From 20 cents down to 3 cents. Now, this is a really good idea because when you guys are building a war chest as a CEO and you try to come back and retrofit all your theater stuff into being COVID safe and stuff like that, you need money. If it had been me, I would have cut out the dividend completely because it makes no sense to pay any dividend out right now, but I'm not Aaron. So this next section I found kind of funny that they had this here, but it was comparison between AMC, their competitors, and the S&P 500 index. And as you guys can see, so AMC did take the lead for a little bit up until from 2015 to 2016, but a little into 2017, but they started to decline, came back, decline, came back, decline, only to end up here where basically the SPY beat them all, which is kind of funny. But their competitors basically stomped them. There's not enough time to go through the financials, but the simplest form of it is that, as you guys can see, their revenue was down, but their operation costs and expenses still stayed relatively the same. I'm just going to throw this in there as well. But their total rev decreased by 77%, blah, blah. And the funny thing is that they tried to offset some of this loss by increasing ticket prices, as seen here. And I find that kind of funny. But essentially, they were also kind of shut down in around March. They reopened, I believe, later in October, but it was a really bad year for them, essentially. We also introduced AMC Private Screening, which allows moviegoers to reserve a separate AMC Safe and Clean auditorium for private screenings up to 20 people, starting at $99 plus tax. Doing some quick qualitative research here, you guys can basically rent the entire auditorium up to 20 guests. It's safe and clean and stuff like that, and you guys can essentially watch new movies for about $150, and you can watch some of the other fan favorites for just $99 plus tax. Again, this thing had a whole FAQ stuff like that where it talks about like what you can and can't do. This doesn't say that it actually comes with any food. You guys basically have to like buy your own while you're there because there will be concession stands open, and that's how they're going to make their extra money and make up that loss in revenue. But if I was investing in AMC, right, I would compare the cost, or sorry, revenue profit from like doing something like this and the frequency of it comparing to how much even a half packed screening would yield me in terms of profit. I can almost say with a higher degree of certainty that these specialized things is kind of cool, but I don't think they yield the kind of profit that AMC is looking to need to survive. Another interesting thing I saw was that during 2020, we entered into an agreement with Universal, a division of Comcast, to distribute films utilizing a 17-day theatrical exhibition window, after which Universal will have the option to make its sales across premium video on demand platforms. Now, what this means is basically that they will release it in movie theaters first, which we were already kind of seeing. They'll release it in movie theaters first, and then they'll release it on whatever kind of like video on demand, like I'm not saying Netflix, but like HBO Max or whatever parent company is releasing a new movie. And honestly, this is somewhat of a lifeline for AMC in terms of going forward and stuff like that in the future. I believe it was 80% of the revenue in North America came from Sony, Disney, Universal, Warner Brothers, Paramount, and Lionsgate. And a lot of the problems I see going forward is that the more popular a lot of these like movie premium on demand movie platforms start springing up, they are basically dead in the water. Like AMC has very little legs to stand on other than the nostalgia of going to the movies, and that'll die out in a generation pretty quickly. So to wrap up, it might surprise some of the viewers to hear me talk about this both negatively and positively, but for the most part, I like Aaron as a CEO. He's a fantastic CEO. What he did with Silver Lake and the debt, it gave his company the necessary runway, and the people who actually like invested in AMC before, he even said it himself, it gave them the much needed lifeline to essentially support his company through this whole pandemic situation, and I like that. That is fantastic. However, me also having to be a rational investor and stuff like that, I don't get me wrong, I have a personal attachment to the movie industry and stuff like that too, but the thing is, I don't think IMAX is going to save them. IMAX is already very expensive, but some people go for the experience, but it's a very small fraction of that, not compared to like the normal blockbuster viewing and stuff like that, right? But I think that the premium video on demand is still going to be a threat. That whole 17 delay that they have with Comcast or Universal, I think that's a great start, but the problem is, I think moving forward, the subscription model, like subscribing to Comcast movies or whatever, like HBO Max, all that sort of stuff, that is shown to yield more money than a single purchase, and I think that's going to be somewhat problematic moving forward for AMC. And not only that, just the cost of seeing a movie. Disney is charging $30 on top of their subscription, so there's kind of an issue there right now with that, right? But eventually, if we can get over that hurdle, I think that Disney, if they were just remove that and just to have the subscription, they'll be fine. That would actually be very devastating for AMC. But I think the last issue I see right now is that a lot of these people that are buying their stock and saying like AMC to the moon and stuff like that, these aren't the people that are actually consuming the product. And what I mean by that is that they're not going to the movies. They're not essentially trying to support their the company they are that they're so supportive of by actually going to the movies, and that's somewhat of a problem because as we saw with their revenues and everything, their attendance and admissions and everything was down by like 70-80%. That's just the result of us not showing up. And if you guys do like AMC, I mean, obviously show up for a movie or two. Like, do it safely, obviously, within COVID restrictions, COVID guidelines, and stuff like that. But, if you guys wanted to show some actual support, I'd say go see a movie. That's all I have to say on AMC. And just remember, just because you're a day trader doesn't mean you have to trade every single day.